Hi everyone, welcome to Dives with Ruby. In this video, I'll be going over two different types of investment options, which are stocks and mutual funds. I remember when I first started making some money, I was so excited. I was like, I'm gonna open an investment account, invest my money, watch it grow. It was gonna be a whole thing. And then as soon as I opened my investment account, I realized I don't know what I'm doing. There were so many different types of investment options out there. There's stocks, mutual funds, index funds, cryptocurrency, bond market, money market, ETFs, marshmallows. Marshmallows is not a real thing. Just wanted to make sure I didn't lose you there. But honestly, it could be. With the amount of different options out there, it sounds like it could be a real thing. So I'll be making a series of all the different types of investment options out there. But in this video, I'll be covering two of the most popular ones, which are stocks and mutual funds. So let's get started. We're going to be going over what a stock and what a mutual fund really is, some of the pros and cons of stocks and mutual funds, and where to purchase or trade stocks and mutual funds. So first of all, what is a stock? Very simply put, a stock is a piece or a share of an individual company. So let's say this chocolate tub of ice cream right here represents a company. And when you purchase a stock from that company, means you're getting a scoop or a piece of that company for a certain price, which is what we call the share price or the stock price. On the other hand, a mutual fund can be represented by the Neapolitan ice cream tub. So it has a little bit of chocolate, has a little bit of vanilla, it has a little bit of strawberry, which represents the mutual fund or the collection of companies that exist in a mutual fund. And so when you actually purchase or invest into the mutual fund, your scoop of ice cream gets a little bit of chocolate, vanilla, and strawberry. So you're actually investing or getting a little piece of all the different companies within the mutual fund. That is honestly the biggest difference. A stock allows you to invest in an individual company, one company, whereas a mutual fund allows you to invest in multiple companies all at once. All right, so let's talk about some of the pros and cons of stocks and mutual funds. So a stock definitely has more risk associated with it. When you purchase a company stock, you're really saying, hey, I really believe in that company, and that's why I'm paying to get a share of this company. Because you're putting all your eggs in that basket, you're saying chocolate tub of ice cream for the ride, there is just more risk because it's investing in an individual company. Now, there is a chance that the company does really well and you're met with high reward, right? The stock price increases and you can sell at a huge profit. But there's also a chance that the company doesn't do well at all and the stock price dramatically drops and you might have to sell at a huge loss. On the other hand, a mutual fund has less risk and allows you to use the strategy of diversification, which is just a fancy way of saying that you're not putting all your eggs in one basket. So because a mutual fund allows you to invest in multiple companies at once, the odds that all the companies in the mutual fund are going to do very, very badly all at once are slim. Not saying that it doesn't happen, but it's slim that it would all simultaneously happen. What's more likely to happen is, let's say you have company A in your mutual fund that's doing super well, and company B is not doing well at all, but company C is doing so-so, right? So your chocolate, strawberry, and vanilla. So when you put them all together, the average of how well the mutual fund is doing is still pretty well, right? It's staying afloat, so you have a chance of growth. Whereas a stock is in an individual company, a mutual fund allows you to have that average, right? That diversification that allows you to have a less risky investment with a mutual fund. All right, let's talk about the fees associated with stocks and mutual funds. So stocks do often have a fee associated with them, depending on the stock that you're buying and really depending on the brokerage account you're using to purchase and sell these stocks. Mutual funds often almost always have a fee associated with them, but it does again depend on the mutual fund and the brokerage accounts. Mutual funds are professionally managed, which means there is a money manager, that's their job, that decide which companies to invest in, which companies to include in that mutual fund, which companies to not invest in, and they continuously kind of make the combination for the mutual fund. So there is somebody whose job is to basically manage the mutual fund. Stocks, on the other hand, You can get a financial advisor. Otherwise, you are your own financial advisor and you decide which stocks to buy and which stocks to sell. Another characteristic that is different for stocks and mutual funds is the timing associated with them. So stocks can be traded multiple times a day as long as the stock market is open. So you can buy and sell stocks as you please, again, as long as the market is open. Whereas mutual funds are only traded once per day. So you can put in the order, and each order is only acknowledged once per day. So once the market closes, they kind of execute the orders, and then you have to wait for the next day. So that's one of the big differences. Stocks are traded frequently, whereas mutual funds are only traded once a day. Now that we've been over the characteristics and the pros and cons of stocks and mutual funds, let's talk about where to actually purchase stocks and mutual funds. So all investment options have to go through a brokerage account. Brokerage accounts that I've used in the past personally are Charles Schwab and Fidelity Investments. Vanguard is not something I personally use, but it's a very well-known brokerage account and is safe. So if that's something you're interested, I would check that out. You could also use online brokerage accounts such as SoFi, Betterment, Wealthfront, Robinhood. I personally used SoFi in the past because I know it allows you to invest in both individual stocks and mutual funds. That is not always the case. Some of the online platforms, online brokerage accounts, only allow you to invest in stocks or only allow you to invest in mutual funds or vice versa. So you just kind of have to do your research for that. All right, that is it for this video. I hope this video has brought some clarity on the differences between stocks and mutual funds. If you're all ready to start investing but are kind of hesitant on how to actually open an investment account, go ahead and check out my video down below that kind of walks you through how to open an investment account with a brokerage firm. Also, leave me a comment down below if you want me to make a video about a specific type of investment option. I will be doing a series again of different types of investment accounts, but if there's one that you're curious to see, please leave me a comment down below. As always, thank you so much for watching. Please like, share, and subscribe down below if you found this video helpful, and I'll see you next time.